Gaming industry has been one of the few industries that has not been impacted by the virus. In fact, it has actually grown. Today we will look at a very interesting company that has a lot of potential to grow in the gaming industry. This company is CD Projekt Red. They're the creators of the Witcher series as well as the up-and-coming Cyberpunk 2077. So let's get into it. CD Projekt Red was created in 1994. It was originally created in order to distribute foreign games in Poland. Later on it created Video Game Studio and produced one of the best known franchises on the market currently, The Witcher. Currently they're working on Cyberpunk 2077 and this is why they're so expensive, as we will see in a little bit. The hype has really gotten into this company. So let's actually look a little bit further into the business model of the company. They divide themselves into two different segments, the video game creation and video game distribution. For the main part, of course, is the video game creation. They have one studio, which is CD Projekt Red. They specialize in creating RPG games. These are incredibly vast and incredibly difficult games to create. Due to that difficulty, they take a long time to create those games. Most of the time, it takes around 5 years to do so. They only have one studio apart from all the other different video game companies, which does differentiate them. They work much more as an independent studio than more of a holding company like, for example, EA or Activision does. They do have a very different business model from other video game companies. While those companies try to extract as much cash from the average consumer as they can, CD Projekt Red actually tries to give them as much value as they possibly can. It's quite a different approach. They do not have microtransactions in the game, and even the additional content for the already existing games does not cost as much and provides a lot more content. For example, the latest DLC for The Witcher 3 was basically a separate game on its own. This gives them one of the best modes on the market, which is customer-centric. People know and know what to expect from companies such as CD Projekt Red simply due to the fact that they have proven to be customer-centric in the past and in pretty much everything that they do. Now, you might be asking, well, if they produce one game in 5 years, how are they surviving for that long of time? In recent years, they have been creating spin-offs of the main titles. This allows them to basically bridge the gap between the different projects, which once again take a very long time. This has worked really fantastically in the last couple of years where they did not have any major releases. This basically gives them boost to their capital and allows them to not only invest much more into the video games but also have a lot more stability. The other part of the business is the game distribution. This is where GOG.com or Good Old Games comes in. They use this website in order to distribute and to sell older games that are not available through other platforms such as Steam, for example. In order to distribute these old games, they use DRM-free model. This means that the game is not linked to any account. This basically allows players to do whatever they want with the actual game without having any repercussions. This is of course great for the customer as itself because, well, they are free to do whatever they want with those games. It is bad-ish for the company if those players start to abuse that system and start to, for example, share video games with their friends without actually paying for them, which since it's DRM free, they can do it. In conclusion, they have incredibly customer-centric model. They do everything in order to put the customer first, and it kind of reminds me of something like Amazon, where everything is customer-centric. They do whatever they can in order to actually bring in the new customers and retain the old ones, which is an incredibly great mode to have. Now let's actually touch a little bit on the management. Most of the top management has been with the company since the absolute beginning of the company. This means more than 2 decades. They seem to share all the information necessary in their annual reports. They speak quite freely about their failures and about what they did right. So I don't have really much to complain in that department. However, there is one simple problem, which is middle management. Like most other video game companies, CD Projekt Red suffers extremely from the extremely poor middle management. This means that the information from the top does not reach effectively the bottom. When that happens, it's basically a disaster because you cannot cooperate large amounts of people in order to do the same exact thing that the project requires. This is the main risk of the company. Bad communication and bad project management can lead to extremely bad results. We have seen this with companies like Ubisoft and some of the games that come out recently that are not that good due to that extremely bad middle management. This is a recurring issue with CD Projekt Red as well. This is not something recent, so I do expect them to somehow try to better it in any case and any way they really can, because it's a really big issue, especially if they're going to try to expand the company, whether expanding the amount of people they have or actually bringing other studios. So now let's actually talk a little bit more about the actual industry of video games. So as we touched on previously, video game industry has been blowing up. But let's actually look at a little bit of a past data to see how it has done in the past and exactly what we can expect in the future. According to Newzoo, as we can see, in 2019 the global gaming market was worth $148 billion and has grown 7.2% since the end of 2018. This growth is led mainly by gaming consoles and mobile devices. When it comes to the actual markets, we can see that the main markets where CD Projekt Red operates, which is Europe and North America, have grown by 7.1% and 8.3% respectively. These numbers are great, and we can see that there's a lot of shift going in when it comes to the media that people consume and how they entertain themselves. Especially now with the virus going on, more than ever we have more and more people actually going into the gaming industry. So I would say that these projections of about 7 to 8% are fairly accurate. As we can see here, the projection that they made in, I believe it was 2018, was for an 8.1% annual growth for the next couple of years. I would say that this is an incredibly good prospect for any industry and very realistic for the gaming industry as of right now. When it comes to the direct competition, there's not that many companies that we can compare CD Projekt to. This is due to the fact that they are quite different from all the other companies, due to the fact that they basically operate as an independent studio. So I have chosen a few companies that represent the best sample size as I possibly could take. Some of these companies produce very similar projects, such as in the case of Square Enix with Final Fantasy and Ubisoft with the Assassin's Creed series, for example. Other companies like Take-Two Interactive, Nintendo and EA, those companies are more of a general taste of what the market actually looks like, since they are far bigger than CD Projekt or any other companies out there. So as we can see, when it comes to the revenues, CD Projekt is by far the last company when it comes to the revenues. They're extremely small and it actually shows. If we actually jump to the PE ratio, we can see that despite the fact that they have very small revenues, they actually have an incredibly big valuation, which actually scares us quite a bit, but we will get to that in a little bit. When it comes to the revenue growth, we cannot take these numbers for the face value that they are because, well, it doesn't make sense. For example, in the case of CD Projekt Red, since the company is so volatile, it doesn't make any sense to actually look at the past 3 years and say, okay, company is declining. We know that the next project, which is Cyberpunk 2077, is going to be an incredibly big game. If that game succeeds, then the growth will be exponential, and I mean like 200, 300, maybe even more percent growth in a single year. So once again, we cannot take these numbers for granted. When it comes to the margins, the CD Projekt by far is the outlier of all of these companies. It's quite interesting how big of the margin they have, and still they still have the customer-centric model that we've already discussed. This is quite interesting because most of the companies like EA, Activision, etc., they all have this model where they try to squeeze as much cash from the customers as they can, but at the same time they have quite bad margins for the companies that are trying to do that, which is quite paradoxical if you ask me. For the return on equity, we can see that these numbers fluctuate quite a bit, but CD Projekt Red actually has a fairly good average return on equity number when we compare it to all the other companies, especially when we compare it to such dysfunctional companies such as, for example, the Ubisoft. So now that we have a pretty clear picture of actually what the market looks like for the video game companies, let's actually look at some of the quantitative analysis for the CD Projekt Red. So first we have the revenues and the net profits. Both of these graphs look extremely similar because, as we already mentioned it like 5 times, the company is extremely volatile. It doesn't have stable returns. Yet, as we can see in the last couple of years, the net profits and revenues have actually been increasing without any major games. As mentioned previously, it is due to these spin-off games, and I really like to see this development because the more the companies rely on their big games, the more volatile they become, because if the game fails, everything goes down the drain and they need another 5 to 7 years in order to actually try to make another push and to get more revenues. When you have those spin-off games acting as a buffer, we can actually see how stable this company actually is despite all of the volatile spikes produced by the major project releases. For the return on equity, as we have previously seen, it's decent, but it's very volatile, not only due to the revenues, but also due to the bad management. I'm not sure whether they can keep up this decent return on equity, or if they're gonna go down the drain. They do only have one studio, and they do not make any other investments outside of that studio, so their return on equity is quite decent, but I wouldn't be so sure, once again, due to that extremely poor management. When it comes to their financial situation, they are basically very conservative, to say the least. They don't invest into other companies, they do not invest much into other studios or other projects. They focus on one thing and one thing only, which is creation of excellent AAA RPGs. That's it. That's really all they do, and that's why they are so good at it. But also that's why they actually are so secure, because they always keep a lot of liquidity. They don't have any long-term debts. They have very, very short and very, very small short-term liabilities, and that basically puts them in an incredibly good position to sustain any volatile changes in both the markets and in their actual, business. The one thing that does preoccupy me quite a little bit is the fact that they started paying dividends in 2017. It's not a bad thing, but it does raise a few interesting questions, such as why are they doing it and why is it so small? It's so small due to, of course, the large valuation that it has, but also why do they do it? They have all the cash, they don't have a lot of cash, and even if they did have a lot of cash, they only have one studio that really needs a lot of capital to actually produce games. So I'm not really sure why they are, even attempting to have a dividend. In my opinion, it's far better if such growth companies as CD Projekt just retain all the earnings and invest them all into the company. So now let's look at one of the most important things, which is the valuation of the company. At a current price of $120, the company is, well, let's just put it that way, extremely overrated. This is a growth company, so using any models really is a little bit of a risk, since even the slight alterations will bring extreme differentiations for the price levels. Still, let's actually try to use the discount cash flow model and see what we actually can get. So at the current price level of 120 and discount rate of 10%, the growth for this company needs to be at 50%. In order to get 10% returns, the company actually needs to produce 50% returns per year. This means that they need to grow at 50% annually for the next 10 years in order to get us 10% return. This, of course, is oversimplified, and this is, of course, considering that we are going to pay exactly the price of the cash flows that the company will have. And yet this kind of shows us that they really are overvalued if you didn't get it by looking just at the price to earnings ratio. Yes, there is a very big possibility that they can get incredible reward and cash and growth with the coming out of the Cyberpunk 2077, and yet I feel like this is just way too much risk at this point in time. We do not know about the success rate of such a project. Yeah, we can look at the past and see that their games have always had great success, even for very reduced budget that they did have in the past. Now that they have full-blown budgets, I'm still not sure if we should trust and we should invest into even such a good company as they for such an incredible big percentage of price to earnings. I mean, it's too much in my opinion. So here is the final summary. We can see that this company has produced incredible products. They're always customer centric, which is a great feature to have in any company. They do, however, have a few problems. The two main problems is the fact that they have a very volatile business, where if some project does not pan out, they will be set back for another 5 to 7 years. And number two is the fact that they have fairly bad middle management. The first one is really the business that they have. They can't really change it unless they really revamp how they make business, and honestly they have made pretty good steps when it comes to bridging the gaps between the projects, as mentioned before. So that risk is a bit reduced. However, the pricing and the hype before those projects can really elevate the buying and the purchasing price of such stocks, just like is happening right now. Having a 182 price to earning ratio is a little bit of an exaggeration, even for the best growth companies out there. The second problem is a little bit more deep. Having poor middle management, or just any management in general, is a really bad thing for a company. Sometimes the projects can turn out to be great, but the management is still really bad. The process sometimes does not equal the outcome, but in the long run, almost always the process will equal the outcome. Sometime in the future, if they continue this way, they will have some troubles and difficulties with developing big, great projects because, once again, of that really poor management. So in conclusion, it's a solid company, it's an interesting company that can have a lot of growth potential, but at the current moment, it is way too overpriced for anyone, even for the people who like to put a lot of risk into their portfolio. This still, I think, is a little bit too much of a gamble at a current price. If the price comes down to, I would say, about 60 or 80, maybe that point is acceptable, because at that point you really don't have that much downside. You only have the upside of potential, in potential explosions with the new projects. So let me know what you think. I've done a lot of research on this company because I really loved the games when I was younger. So it's a very interesting company to me. I've known it pretty well. I also have to disclose that I am an investor into this company. I did purchase it at $66 per share. I believe it was about a year ago, actually exactly almost a year ago. So yeah, if that's what you're concerned about, yeah, I am an investor into this company. So yeah, let me know what you think about it. Let me know what other companies do you think are really interesting into the gaming sector. I think it's a sector that's overvalued, or it's becoming overvalued, but I think there's still a lot of potential for really interesting investments. And yeah, I'll see you next time. Bye bye.